Hey, good morning, everyone. How is it going? Happy Tuesday, happy CPI day. Today, we were looking for a little more muted of a session, which we got until about the close, where the ES and everything just rallied upward. Very, very large spikes as we enter a week of volatility. Today, we had CPI. Tomorrow, we have the FOMC. We have Quad Witch, VIX expiration, monthly VIX expiration the week after. It's just a lot. So let's talk about what we got going on this morning with the Fed super, super determined to bring inflation down. We saw the May Consumer Price Index numbers come out at 8:30 this morning. So I'll give you a quick rundown of that. We have just going down the list here, the actual year-over-year CPI came out at 4% versus the 4.1 expected. Last time around, it was 4.9%. So a drastic drop, which is exactly where the Fed wants this thing and exactly how the market likes it to go up, right? The market's bullish on this news. We got a pop. We have US CPI month over month as well, 0.1%. Was the expected 0.4% was last time around 0.1 is what came out. So again, another bullish number. The US core CPI year over year, on the other hand, 5.2 expected, 5.5 last time around, 5.3 this time around. So a slight miss on that. And then the US core CPI month over month came out as expected at 0.4%. So the Fed, right? The PCE measure is going to be their most important thing, realistically, their metric, which is something that kind of came out a little hotter last time around. It's the measure of what consumers are actually spending. So that May report won't come out until June 30th, which is after the Federal Reserve meeting minutes, which are tomorrow. And there's about a 90% chance, or maybe even higher, that we see zero changes to the rates. So it seems like the Fed is very, very on course to bring inflation down, even potentially into the end of the year. If you go into even Twitter, Twitter has this interesting page here that I follow. There's probably a website for it, but I saw them on Twitter. Let me just find it right here. 2 seconds. So Trueflation, right? Trueflation, that Twitter page, has what is quote unquote the true data comes out. 5 minutes ago, they tweeted 2.74% is the actual inflation that's out of the US, while the government reports 4.9%. So very interesting. I think we do get that Federal Reserve level of 2% fairly quickly into the end of the year. And we'll see how that does continue to shape up. But based on that, we have pretty much stifled a lot of the inflation fears, where a lot of people are looking at the macro perspective and thinking that the worst is yet to come. But everything is looking very, very bullish in these times, where we could see a pullback realistically start this week or next week. But to add to that, right, it's not going to be a very deep pullback, and I do think a lot of this downside is over, and we'll see that on the flip of earnings in the coming quarters, most likely. So in other news, Apple closed at an all-time high, or sorry, it ran into an all-time high, as well as closing at its highest price ever on Monday. Though some of the skeptics are doubling down, shares settled up 1.6%, higher at $183.79. So before pairing some of those gains in the pre-market today, as UBS downgraded the stock, it's still hard to argue with the robust balance sheet buybacks and solid revenue streams of the company led by CEO Tim Cook. He also unveiled Vision Pro headset last week, and it didn't receive the best of applause, I guess, but we'll see how that does shape up. Apple's still chugging along. With Apple at all-time highs, it's pretty hard to be bearish in this market. So sorry, not JP Morgan. In terms of other news, we're going to be watching the FOMC meeting minutes. They do open up to the public tomorrow. It does begin today. So that's another thing. I do expect a little more volatility in today's session, as the S&P rallied pretty fiercely throughout this CPI data after the initial drop. So we're up. We're through that 4405 level, which is the top of a distribution, meaning that there is more potential to the upside. These past distributions have been stifled and pushed aside fairly easily, with just a constant bid in the market trying to come through right now. So we're trading at 44.14. There's another level up at that 25, and then we have the 43s above. So a lot of potential there to the upside. I don't want to be necessarily super bearish on this, but if we start moving back under that 0705 area, I am going to be looking for maybe some of those shorts. As it stands though right now, we do have a lot of volume at the lows of the session today on the S&P. So some pullback levels include the 44.03 to '05, the 95.94 as well. So those are two main areas that dip buyers can get very happy if they do see. So that's what I'm going along with today. We'll open our live trading room up right now to trade some futures, and we'll see you all tomorrow. Hello, Milky Fade. Good morning and morning. And I hope everyone enjoyed this, has a great trading day, and let's get ready for the FOMC tomorrow with the first big event out of the way, which was the CPI today.